Here then. So welcome to our September family webinar. I'm David Gallivan. I'm the Compliance and Appeals Branch Manager from the Family and Medical Leave Insurance Division here at the Colorado Department of Labor and Employment. I'm joined by a large group of specialists from our division here. We have some of our policy team and some of our communications teams looking forward to be answering some of your questions, both live and in the question and answer section here. I'm going to give you a quick bird's eye view of the program before we dive into the focus of the webinar today, which is how this new program is going to lead for self-employed Coloradans. We're going to answer as many questions as we can, but before we get started, I do want to throw out some quick housekeeping. This presentation is going to be available on our website. That's FAMLI, FAMLI.colorado.gov shortly after the webinar. So if you want to listen to my voice over and over again, perhaps as you fall asleep in the evenings because you find me so relaxing, feel free. We make it readily available for you. We'll also send it out to everybody who's registered. Please ask your questions in the question and answer function of the Zoom meeting. That will bring it into all of our specialists today and make sure that we can get you an answer. The chat is actually disabled, so you can try to ask your questions there, but you're not going to get a response. Our team of panelists will be sharing some helpful links in the chat throughout the session. So if you hear me say something's on the webpage, check the chat and there'll probably be a link to it because our communication staff is really awesome at doing that. You can find recordings of our previous webinars on the YouTube channel and also again on that webpage. And I just saw that link pop up in there. So thank you, Kristen, for doing that. And let's then go ahead and take a look at our agenda for the day. So what is FAMLI? What's our timeline for implementation? What the options are for self-employed or gig workers, some next steps, some potential changes, and then we're going to jump into your questions. And I think we might have a little look at our portal in there too, at the My Family Plus employer. So what is FAMLI? Let's go ahead and take a look here. Quick overview of the program. FAMLI is going to provide paid leave for Colorado workers to take care of themselves and certain loved ones during certain life events, which we'll get into in a moment. It's going to cover almost all workers in Colorado, including independent contractors, sole proprietors, gig workers, and all those who are self-employed. There are some people, like those sole proprietors, gig workers, self-employed, who have a choice about whether or not to participate. But otherwise, if you're working in Colorado and you don't work for the federal government or a railroad, you're probably going to be covered under this program. It's a social insurance program funded both by employers and employees through the payment of premiums. Self-employed workers only pay what we call the worker portion of that premium, which right now is 0.45% and will be through the next year or so at least until we start looking at possibly changing that, hopefully lowering it. Family participation is entirely optional for workers who don't employ anybody else. So if you're out there on your own, you're driving for Uber, you're a solo plumber out there doing stuff without any employees, it's entirely optional. So let's take a look ahead to when benefits are going to become available to workers in January of 2024. FAMLI is going to provide 12 weeks of paid leave for Colorado workers to take care of themselves and their loved ones. Those who experience birth complications may be eligible for an additional 4 weeks. So those individuals, it's birth and delivery or pregnancy complications would bring their total up to 16 weeks. Covered workers will be able to apply for paid family leave benefits during certain life events, such as managing a serious health condition for yourself or for a family member. Caring for a new child, and that's going to include adopted and foster children. So if you're welcoming a new child to your family, however that may be happening, you may be eligible for some bonding leave. Making arrangements ahead of a military deployment to deal with the immediate needs and impacts arising from domestic partner violence or sexual assault. And these benefits, they're going to come from us here at the Family Division. We are going to pay those out and handle all of the administration of it. So let's take a look at the timeline and see where we are in this whole process of starting this program up. We're almost at the end of the third quarter of 2023, and we're working hard to make this program work for everyone in Colorado. Just last month, we launched a special portal for healthcare providers who are going to be asked to validate claims. We're not going to spend a ton of time here today on that portal, We covered it back in August and explained a lot about it. There will be a link to that webinar in the chat. I do want to say that I think that this healthcare portal is one of the most amazing things I've ever seen. It's really innovative. We are so far the only state that is doing this, just working to make it so much easier for workers to get the certification they need, for doctors to provide that certification, and doing it all digitally, without paper, without paperwork, without me or any of my colleagues having to read doctors' handwriting. Later this fall, though, we're going to open up the portal for all Colorado workers. We know that many of the life events we just discussed don't come on a schedule, but some of them do, and you can see it coming, like the birth of a child or a surgery that you're planning to have in the early part of 2024. When we open this portal, which will be sometime this fall, you'll be able to come in and file an application. Now, we're not going to pay benefits until January 1st. That's when benefits become available. But you can get into that portal. You can get all of your paperwork done. You can file everything that you need and just be ready to go in January when that covered life event comes in. And then you're not going to be caught in that crush of everybody who's looking to start the year off, who might have an emergency or who didn't attend this webinar and didn't know they could get in there early. But today, our major focus today is going to be how FAMLI is going to work for self-employed individuals and those who work for local governments that have opted out of family participation. A quick note here, and if we can move on to the next slide. This guidance is based on upcoming proposed amendments to our adopted rules. So this isn't going to be finalized until we formally adopt those amendments in late October, but we want to give you all a heads up. So if you've never dealt with the government rulemaking process before, what's going to happen is expect on Friday, we're going to issue a notice of proposed rulemaking, and that's going to have a proposal of rules. And that's what I'm going to talk about today, is what we're proposing. But once we issue that notice, there's a public comment period, and then there's a hearing. You're welcome to send us written testimony and comment during that comment period. You're welcome to attend the hearing. Details are going to be on our website, and you can testify at the hearing on your opinion on these rules. After that, we go back, we look at all the testimony, at all the comments, and we decide if we need to modify that proposal at all before we adopt it. So I'm going to be talking today about what we're planning to do, but none of this is final yet, and it's all still subject to that review process. It can all be changed, and we really want to hear from you as part of that rulemaking process. It helps us make better rules. But let's start with the workers who are self-employed. This is going to include independent contractors, sole proprietors with no employees, gig workers, self-employed workers. Everybody in these categories have historically had to use their own personal savings to make ends meet when facing those life events. And so if something happened in your life that took you away from work, you were kind of on your own. Hopefully you had some savings. If you didn't, you might have been in a very rough spot. So you have the choice here. FAMLI is optional insurance for you that will provide a benefit that you otherwise may not have been able to afford. And it's easy to say right now, oh, I don't want to pay those premiums, so I'm just not going to participate. But I urge you to think about it and look at what the benefits are. If you have one of those qualifying life events and you're not able to work for a period of time, FAMLI is going to be there to provide you with a safety net. So if you do choose to participate, nothing you need to do until 2024. We'll talk a little bit about that and the steps in a bit. We'll show you some of the portal and get into some details. But there's another group of Colorado workers I want to talk about who can choose whether they want to participate in FAMLI. That's the employees of local governments that voted not to participate in the state program. So a little bit of background: when Colorado voters approved this program back in 2020, they gave local governments the option to not participate. So that is going to include entities like cities, counties, public school districts, special districts. Those governments could take a vote on whether they wanted to participate. There's been some confusion here. People often think that if their employer opted out, that means they can't get family leave. And that's not true. Those employees can still participate if they want to. They can take leave and access all the benefits that are available to people who work for private businesses. We're going to treat those individuals basically the same as self-employed individuals. You have that same option to sign up. The points you see on the slide are the same for employees of the opted out local governments. We sometimes internally call those EOLGs, the EOOLG. It's not a great acronym. We're working on it, but fixing the acronym is a little bit of a low priority right now. But family participation is optional. There are going to be some requirements, and we're going to talk about those here in a moment. No enrollment period for opting in. So you can opt in whenever you want. And if you do opt in, the premium is going to be 0.45%. That's what we refer to as the employee contribution. You do not have to pay the employer contribution. They don't have to make up the difference because their employer opted out. Now, there are some interesting wrinkles here because once a local government opts out, they have another decision to make. They can say, we're not doing anything with this program, so we're just going to step back. Or they can say, we're not going to participate. We're not going to pay premiums, but we're going to help our employees who do. So those are facilitating employers. So what those employers would do is once they know that you've opted in, they're going to deduct the premiums from your wages and pay it to us, just like they would if they were a participating employer. But if the opted out local government has opted not to remit wages and contributions for the employees, you're going to have to do that for yourself in the My Family Plus employer portal. And then we're going to treat you as self-employed. So you would register as that EOG, the employee of a local government that has opted out. We're going to do some details on that here in just a moment. But if you have one of those facilitating employers, a local government that has decided to facilitate the deductions, what you do, once you decide that you are going to participate in FAMLI, register in My Family Plus employer as an employee of an opted out local government employer. You'll need to get the federal employer ID number, the FIN, from your employer, and tell your employer that you voluntarily opted into the program. Your employer will then begin those payroll deductions after you voluntarily opt in. They will submit your wage reports. That has to happen quarterly. We need to know how much you were making, and then you pay premiums based on that. That also is going to affect your benefits. That's how we calculate it, is based on those wage reports. And once you have one calendar quarter of coverage, you'll be eligible to file a claim. Now, this is one of those changes that we are proposing. This isn't in the rule quite yet, but we are proposing that we're going to calculate benefits based on wages that had premiums paid on them. So you would need to have a calendar quarter of wages in our system. We are discussing also a system in which you would be able to pay those premiums at the time you enroll. So you could say, I would like to be covered by FAMLI now. Last quarter, this is what I would have paid in premiums. So here's that amount of money, and then you'd be eligible for benefits. So this is what we're working on right now. When you self-elect FAMLI coverage, though, you do have to commit to participating in the program for 3 years. So that means if you continue working for that local government, or you continue being self-employed, you've got to continue filing those wage reports and paying premiums if you have wages. Or if you go to work for a regular employer who's participating, then you're still participating, and that counts towards your 3 years as well. All right, so let's go ahead and take a look here at the portal on our next slide. So if you have the option whether to participate in the FAMLI program and you want to, here's where you start. You're going to need to register in a panel called My Family Plus Employer. And I know that's a little bit confusing because you're not an employer, you're an employee, but we're the government. This is what we do. You are, in this case, your own employer. And so when we pay premiums, you pay it through the employer side of the portal. And that's how this is going to work. So you come in and you register as an employer, just the name of the portal that you're going to use to send in those wage reports. You're going to start by going to family.colorado.gov, and then you're going to find the My Family Plus Employer page. Now on this page, you're going to find some step-by-step instructions, some how-to videos, and we have full functionality in Spanish. I myself don't know how to say we have full functionality in Spanish, but we do have those instructions there. So if you are a Spanish speaker, you can still get that guidance. This is what the welcome page looks like. So when you visit for the first time, you're going to need to create an account. There's a button there that says create an account. That is what you click to create an account. It's right underneath the sign in with login.gov. Login.gov, by the way, is a shared login service run by the US government. You may already have a login on this for some other services. If you've gotten passport or TSA pre-check, you might have used it. And we're using the same thing because it's secure and available. After your account's created, you come back and you click that sign in with login.gov, and that is going to take you into the portal. We're going to drop a link in the chat here for a YouTube video about registering. Now let's talk a little bit about the next steps. You're going to upload your prior year's tax transcript or other financial documents. You got to submit your most recent federal tax transcript, and you can just go to the IRS webpage to get that. It's really easy. We've got a link there on the slide. If that tax transcript does not show self-employment income because you recently started, you got to submit some other documents to show your income. The bottom line here is that we need to know how much you're making because that determines your premiums and your benefits. Self-employed workers who voluntarily wish to participate in FAMLI are only going to be responsible for paying that 0.45% employee share of the premium. This is based on your gross income. If you decide to participate, you're going to submit that tax transcript for each year of coverage to report your earnings and pay your premiums. And so that's what you're going to do once you self-elect. If your most recent tax transcript does not show you self-employment income, the things we might be looking for then are going to be bank records, receipts, invoices, some self-attestations. So you're just going to tell us what you made under oath, or any other documents to verify or determine your income. That gets a little bit more complicated. We looked at this when we set up this rule, and getting your tax transcript was actually far and away the easiest way to demonstrate this income. Once you file your taxes, we're going to rely on those transcripts to verify. In all cases, your premiums and benefit payments for the year will be based on your tax return transcript for that year. The prior year's transcript will be used to estimate your premiums, and then you're going to pay premiums based on that estimate. Once you submit that year's tax transcript to the division, premiums and benefit payments are going to be recalculated retroactively. So you may receive an invoice. If we undercharged you for premiums, you may get a refund. If we overcharged you for premiums, and if you received benefits and we go back and we look at what you made, if your benefit calculation changes, so will your benefits. It could well be that if you made more than we estimated, your benefits would go up and you'd get payment for that. If you made less, benefits may go down and you may have an overpayment. Let's go ahead and take a look at the next slide here. This is the effective date for your election. FAMLI benefits are based on premiums paid on your past income. So if you don't have any income registered in the system for previous quarters, your benefit is going to be zero. That's why you're allowed to backdate your coverage period between 1 and 5 quarters. You only need 1 quarter of coverage before you qualify for benefits, and your retroactive premiums won't be due until the next regular premium date. Now, let me just take a moment here and explain the 1 to 5 quarters. We have what is called a base period, and that's what we use to calculate your benefits. The base period is essentially your most lucrative quarter out of the past 5. So we want to look at a quarter where you made the most money out of the last year and a quarter. And so that's why you may want to backdate 5 quarters. If a year and a quarter ago, you had a really, really good stretch and you made lots of money, you may want to base your premiums on that rather than on the most recent quarter. It'll raise your premiums a little bit, but it will also give you more benefits. So there's no open enrollment period. You can enroll whenever you want. We're always open for enrollment, but you are going to need 1 quarter of coverage before you can file a claim. You can elect that retroactive coverage period. So that means that if you have an injury and you need to take FAMLI right away, you can come in, you can register, and you can elect that retroactive period, and that will give you some benefits there. If you know something's coming up, you can go ahead and register ahead of time and pay that 1 quarter of premiums. This is going to happen in January 24. You're going to be eligible to come in and get that retroactive coverage. We're going to have some more information on this later in the year. As I said, we are still looking at this as a proposal. This isn't final yet. Once it's finalized, there will be some more specific rules on our webpage. So what happens after you've registered in My Family Plus Employer and you're ready to apply for benefits using the My Family Plus Benefits portal? This is going to go live, we're anticipating, in late November. Once you qualify for coverage, self-employed workers and employees of opted out local governments can file claims and access benefits. You're going to use the employer portal to pay premiums and the benefits portal, My Family Plus Benefits, to apply for benefits. So let's look at then the final step, paying premiums after each quarter for the last 3 years, for at least 3 years. After you opt in, you got to pay premiums for 3 years. Your first payment is going to include premiums for all quarters you elected as part of your effective date election. And the premiums are due at the end of the month following each completed quarter. So January 31st, April 30th, July 31st, October 31st, those are the months that you are going to be paying premiums. Once you qualify for coverage, you are still going to be, you're going to file for claims, access benefits, but you're still going to use that employer portal to pay premiums and the Family Plus portal to apply for benefits. But you do need to come in every quarter. You need to provide us with those wage reports and you need to pay those premiums. That was a lot of detail, but one more detail here. I want to go ahead and answer the question about what happens if someone goes through all that we just described and then they change jobs. Well, it depends on what job they switch to. So let's say we have a self-employed individual who goes to a regular private business. The new employer is going to report wages to family on behalf of their employees. And in that case, you want to come into the My Family Plus employer portal, and you can inactivate your self-employed account, and your wages are then going to be reported under the new employer moving forward. You don't want to do that unless you really are completely moving into a new employer and you are stopping being self-employed. You know, if you've been driving for Uber, you get a 9-to-5 job, but you still drive on the weekends, you're still going to need to keep that account open and file those wage reports for that gig work that you're doing. Mostly because you want to report those wages. So if you do need leave, you get the benefits that you're entitled to. But also because if you don't, it's kind of fraud, and we frown on that. But what if you go from a local government that opted out to another local government that opted out? You don't need to change anything. You just keep doing what you've been doing. You switch from Uber to Lyft, same thing. You just keep doing what you're doing. You don't need to make any changes. All right, so we're wrapping up here and looking to get into those questions. We want to hear from you. There's a lot of ways that you can participate with us or that you can give us feedback. We've got an email address there. We're on most of the socials: Facebook, Twitter, Instagram, and LinkedIn. I keep asking for us to get on TikTok, but apparently there's some sort of a security risk if my dance moves get out into the internet. So we're on the big four there. You can subscribe to our newsletter. I really recommend that you do subscribe to our newsletter. I promise we don't send out a whole lot of information on this, but the information that you get is critical. Things like benefits are now available, or the portal is open so you can come in and apply for those benefits. You'll hear about our rulemaking process. And one of the things we don't list here is those rulemaking hearings. You will hear when that hearing is going to be, and you'll have the ability to register to come in and attend that hearing and to provide official feedback regarding these proposed rules that we are going to listen to and that may change our mind regarding some of these proposals. You can also give us a call. Our number is 1-866-CO-FAMLLY. That's 263-2654. Monday through Friday, 8 a.m. to 4 p.m. We have great customer service reps who answer those phones. In a lot of cases, they have all of the access that they need and authority and information to fix problems that you may be having. And if they don't, they knew who to send it to, and we can get your problems fixed. There is a chat function that you will go through before you talk to somebody, but you will usually be able to reach a live person to help with your problems if the chat assistant doesn't help you out there. So that's what I have in terms of our prepared slides. Thank you so much for being here today. I have seen a bunch of questions popping up in the Q&A, and I think we're going to go ahead and try to answer some of those. Jessica, what are we doing next?
We'll go ahead and take some live questions. Thanks, David. I want to start with one here from Matthew. His question is, I need to take leave starting January 8th. My employer is a school district and they have opted out. Can I begin the leave on January 8th?
Yeah, and so some of this is going to be really dependent on finalizing those rules. And I know we're late in the year to be doing that for you. But if the system goes through as we have planned it, as we are proposing it, then yes, you're going to be able to come in, register in our system. You're going to want to backdate your coverage, and then you'll be able to file a request for leave as of January 8th. And if all of the certifications and data are there and we get everything we need, we'll be able to approve that for you, and you'll be able to receive benefits when you need them when you start on 8.
Thanks, David. We have another question here from Sarah, which is kind of related to the backdating scenario. Her question is, when do you want your election to become effective? Does that mean when you would want our leave to start? So when you go into My Family Plus Employer and you're backdating your effective date, what does that mean?
Yeah, so it's actually when you would start paying premiums, because you need to pay premiums on wages in order for those wages to count towards your benefits. So if you go in and you say, I want to be covered as of today, and I want to go on leave tomorrow, what we would say then is, great, you're eligible for leave, but your benefit calculation is 0 because you don't have any wages in our system. So the date of your effective coverage, unlike a lot of other insurance programs, what we will allow you to do is say, I want to be covered starting 3 months ago or 6 months ago. And then we'll look at the wages that you earned in that period of time. We'll calculate the premiums that are owed on that. And then you'll be eligible for benefits right away based on those wages. And when you get to the end of the current quarter, you'll pay the premiums on those. So we want to make sure that people have that choice of when to opt in or opt out, while still making sure that they're getting some credit for some benefits, or for their premiums and for their wages, so they can get some good benefits. And remember on this, everybody else in the state, everybody who works for a private employer or a part of the state government or a participating local government, have all been paying premiums since January 1st of this year. And we're not eligible for benefits until January 1st of next year. So one of the things we're trying to do here is to provide a little bit of equity in that system to make sure that everybody is paying some premiums before they start drawing benefits.
Thanks, David. I'm going to go to Melissa's question that just came in. When coverage is backdated, will the premiums be due all at once in a lump sum?
They will at the end of the quarter. If that's going to be an issue, you can talk to us. We don't have any procedures for payment plans on the premiums, but we'll talk to you and we'll see if there is anything that we can do. Remember though, premiums are 0.45% of wages. That is a little bit less than half of 1%. So for every $100 there, I should not do math. I'm going to make a mistake on this, but the premiums are a relatively small amount of your wages. And we have a premium calculator on our website that will give you better information than I can trying to do this math on the fly in my head. So hopefully those premiums won't be too unbearable for you based on the retroactive coverage.
Thanks, David. We have a great question here from Sherry, which we haven't gotten this iteration of it, but it is a common question. It's 3 parts. We had our baby with a complicated pregnancy 3 weeks ago, and our employers are participating in FAMLI. They have said that a baby born in 2023 can give you coverage in 2024. Is this true? And can we have details on this retroactive benefit? Also, can this benefit be taken advantage of while also working part-time?
All right, so let's start with the retroactive benefit part of this question. What we're talking about here is not really a retroactive benefit. It's a retroactive premium to allow people to get benefits now and looking forward. For somebody who is employed by a participating employer, you've already been paying your premiums, so there's no need to think about going back and paying your premiums. Well, it's already done. So in that case, you would be eligible for leave. For bonding leave, that's a new child joining your family, birth, adoption, foster placement. You're eligible for up to 12 weeks of leave anytime in the first year after that new addition to your family. So if you have a child born in 2023, as long as there's at least 12 weeks in 2024 before their first birthday, you can take up to 12 weeks. If you have less than that, if somebody's going to turn 1 on February 1st, you'd still be eligible for leave through January. So that is true. If you have a baby born in 2023, as long as you've still got some time in that first year, and this is basically anybody born after April, you're going to be eligible for those full 12 weeks of leave. So you're going to be eligible for that. With a complicated pregnancy, the pregnancy complication leave isn't available until January. If there were some effects of that complication that were lingering into 2024, you could be eligible for that leave. but that's really going to depend on the medical facts of the case. You can feel free to request it to submit documentation and certification, and one of our claims managers will take a look at it. And then for while working part-time, absolutely. This is available for everybody. We're going to calculate your benefits based on your regular work schedule. If you're working part-time, you can take those benefits for your part-time job. If you are doing like a reduced work schedule because of an injury or because of one of these serious health conditions, you can still access FAMLI for the part of the day or the part of work that you're missing. So if you have a medical restriction that takes you from 8 hours a day to 4 hours a day, you can come in and request FAMLI benefits for the 4 hours a day that you're not working because of those medical restrictions.
Thanks, David. That was a long one, but very helpful. We have a question here from Stephanie. She's an employee of an opted out local government. I need to take leave on January 1. Do I need to report wages and pay a premium by October 31st in order to be eligible for leave in January?
You don't have to report wages and pay a premium on October 31st. This is that situation where you're going to be able to backdate the coverage. So you would come in and register in our system. As soon as we open that up, hopefully that'll be late December. It may be early January, but then you would backdate coverage going back to at least this most recent quarter, the end of 2023. And then you would pay premiums at the end of the first quarter of 2024, but that would still open you up to receive those benefits. You can file a request for leave after it starts. If you have the ability to, you should do that up to 30 days before it starts. But in this case, you're not going to have that ability to. So if you need to file something, our system will be open on January 1st, but I'm not going to be here. I think we're looking at January 2nd, that Tuesday is going to be the day that you would be able to come in and file that and talk to our customer service reps and get the guidance. But yeah, we're going to do that. You should still be able to get your leave, and you would just backdate your coverage when you started that process.
Thanks, David. I'm going to go to a question from Siri. She says, as a government employer, how will we be notified of employees who are participating in the program?
We are working on building that functionality into our program. So all of the local governments did register in My Family Plus Employer, even if the only thing they registered for was to tell us that they were opting out. So we have accounts for all of those employers, and we're working on an HR dashboard that's going to provide that information to you, and that'll be up and running before the end of the year. So we will let you know the same way we would let any other employer know when your employees are taking that leave.
Thanks, David. And I know we do have a couple of our tech subject matter experts here on the call, but feel free to jump in, Ashley, Alyssa, Arjun, if I'm misspeaking here. But when an employee files for family benefits in My Family Plus, you are required to list your employer. And once that happens, that employer will receive a letter from us to indicate that they have an employee who has filed a claim. So that'll be the temporary notification until we have that dashboard that David mentioned built into our system that will give you online digital access to manage those claims. I'm going to do another question here from Matthew. Are employers of opted out local governments required to continue providing benefits, i.e. health insurance, while an employee is on family leave? That's a good question. David?
Yeah, and health insurance in particular is specifically mentioned in our statute that it can't be terminated while you're out on leave. If you pay a portion of the premium, you do need to continue paying that, and you want to talk to your employer about how that's going to work. It's up to the employer. There's a lot of different ways to do it. Sometimes they would just require the payment be made. Sometimes they'll pay it over the course of the leave, and then they deduct it from wages when you come back. But yeah, the health insurance is going to continue. Other benefits, not necessarily. Some things like, pension contributions, those are allowed to stop. Leave accruals, those are allowed to stop. But health insurance does need to be continued while you're out on leave.
Thanks, David. A question here from Alana. I work in healthcare for employers that have opted in on an as-needed basis. How will my premiums be calculated for bonding leave with a new baby? Sometimes I work 40+ hours a week, and other times I work 0 hours in a week.
Okay, yeah, so that is going to get really interesting. But the premium calculations, because you're working for an employer who is participating in the program, on the bright side, you don't need to do this on your own. But what we do is we look at that base period. So what we do is we go back, we look at that most lucrative quarter for you, not including the most recent one out of the past 5. So we would take that quarter, we look at how much money you made in that quarter, we divide it by 13. It's quarters, 13 weeks. We divide it by 13, and that is what we call your average weekly wage. So your premiums are going to be calculated based on the actual wages you're paid. When your employer issues you a check, they would be taking that 0.45% out of those wages and transmitting it to us. But your benefits are going to be calculated based on that average weekly wage. So if you had a quarter in that base period where you work 40+ hours a week for every week, that's what we're going to look at to calculate your benefits. And we're going to do that. We hope that that's going to give us a good look at what you would make on average over the course of your work life, and that will calculate out those benefits. But your employer should be calculating your premiums on that. It's all going to be based on that just 0.45% of whatever they pay you in that pay period.
Thanks, David. I have a question here from Tiffany, and this might be a good one for some of our tech subject matter experts that are on the call, perhaps Talat. I might toss this one to you, so feel free to jump in since this is still in the works. Tiffany is asking, can you have multiple employees under the employer have access to the HR dashboard?
Thank you, Jessica. As David mentioned earlier, that's still in solutioning stage, and we hope that that would be part of the solution as of now. So cannot speak more to that, but hoping that that would be part of the solution.
Thank you, Talat. And thanks for giving David a moment to breathe. Let's see if we can get another one here. Becky is asking, can I get short-term disability and FAMLI at the same time working for a government employer who has opted out?
Yeah, that's a great question. So that coordination of benefits is always a rough topic here because it does get kind of complicated. So first, nothing that your employer does alters your entitlement to family benefits. So you come in, you tell us you need leave, you've paid your premiums, we're going to calculate the benefits that you're entitled to, and we're going to pay you those benefits. Employer provided programs like short-term disability can modify what they're going to do based on your receipt of family benefits, and you'd want to look at the program and talk to your employer about that. They may be able to offset the family benefits, so they would reduce what you would be paid. Really, the only rule we have on that is that you can't exceed your regular wages based on benefits. We don't want somebody getting paid a double their regular salary while they're out on leave. So the short-term disability may look at your family benefits and bring you up to full wages because our benefits are reduced. It's not full wages. It depends on how much you make in an average week, what percentage of those wages are reimbursed. So your short-term disability may do that top off and bring you up. It may be just reduced by the family benefits and then you get paid whatever is left over if it's in excess of it. There are some employers who may decide to cease offering short-term disability, instead relying on family, because if family is going to provide that benefit. So you really want to talk to your employer about what's going to happen with your short-term disability, but the existence of that program doesn't change your entitlement to family benefits at all.
Thank you, David. We have a question here from Sarah. I just want to revisit. This is a topic that we've been talking a lot about in today's session, but it is the theme of the day. So I want to make sure we're hitting this home. Sarah's asking, so the answer to that question, when do you want your election to become effective, would not be when your leave would start, but rather when we would want to start paying our premiums. So a backdated coverage.
Yeah, and that is exactly right. So it's when do you want that coverage to start? It's a pretty good deal, right? Imagine that you get hit by a hailstorm and then you were able to go call your car insurance company or your home insurance company and up your coverage to make sure that you were covered for it. They won't let you do that. We will here. You don't have to come in and talk to us until you're ready to take that leave. But when you do, you're going to owe us some back premiums. So that question of when do you want this coverage to become effective? It's when do you want to start paying those premiums, which should be at some point before you need the leave so that we have some wages in our system to calculate out your benefits. It could, though, be, let's say that in 3 months, you're going to want to take that bonding leave to welcome a new addition to your family. You could come in and say, I want the coverage to be effective today. You've got 3 months there. At the end of that quarter, you're going to pay your premiums. And then when you need your leave, you're just going to be good to go. And you're not going to have to worry about any lump sum payment of back premiums. So if you know you've got leave coming up and you've got at least a quarter before you need that leave, you can make it effective that day and just join the program and pay ahead of time. If you're worried that something might happen that would keep you from being able to pay those backdated premiums, you could sign up just for the security of it, for knowing it. But in most cases, what you're going to do is when you want your coverage to be effective, you're going to backdate it to the date that's going to give you the best benefit calculation.
Thanks, David. This is also sort of related. We have a question here. So the premium is calculated based on the taxes from last year's filed taxes, in parentheses, gross income for 2022, or from the reported wages from preferred selected months of 2023.
Oh, I think that one's my fault because I wasn't clear. So thanks for asking that. Let me clarify. So yes, the premium is going to be calculated based on for a self-employed person who gives us a tax transcript, it's going to be based on the wages that they pay taxes on. We're going to go look at those gross wages. But your benefits are going to be calculated based on that most lucrative quarter. So what we do is we look at the whole year and we calculate out your premiums. But when you come in and say, okay, well, now I need benefits and we're trying to figure out how much you receive, that's when we're going to step in and pay those and look at that more recent quarter there.
Thanks, David. I have another question here that I would like to hand over to Talat. The question is, as a self-employed worker, we can or cannot register as a self-employed worker and start paying premiums now, or do we have to wait until January to start paying premiums?
You could start paying premiums only in January. As of now, we are not accepting registrations for self-employed personas. So you can register if you haven't already registered prior. You will be allowed to register 1st of January 2024 and can upload wages for the previous quarter at that time.
Thank you, Talat. Here's a question from Stephanie. As an employer who opened an account in Q1 and have been paying in, discovered during Q3 that the employer should not have opened an account or opted in and have not been paying premiums deducted for Q3. Can employer close out accounts? The employer is self-employed. There we go. That's what we're missing here. Talat, are you able to answer this question that it's I'm hoping I'm understanding correctly, Stephanie, but you're asking if you mistakenly registered earlier and as a self-employed person, you want to close out your account.
Yeah, so Jessica, yes, earlier on in the year that was open, the self-employed registration was open, and then there were a few who came in and registered, and since then we have stopped that registration. So if you've already registered, you do not have to pay any premiums until you're ready to file a claim, which will be next year. So when you're ready to file a claim, you can upload the wages for the previous quarter. You do not have to take any actions right now and close your registration. Does that answer the question, Jessica?
Yes, I think so. Thank you, Talat.
Jessica, if I can, I want to just take a step back because I think I misspoke earlier. When we're talking about health insurance benefits, the provision of the FAMLI Act that requires an employer to continue those healthcare benefits actually does not apply to local governments. So in those circumstances, under the FAMLI Act, there is nothing that would require the employer to maintain that coverage for you if they are an opted out local government. There may be some other laws that would require it, and I suggest talking in with your benefits coordinator at your employer, but I just wanted to clarify that.
Thank you, David. Thanks for clearing that up for us. We have a couple questions here that all seem to be follow-up questions. Here's one from Melissa. Do local government employers report their wages the same way as self-employed employers would with tax returns? I believe the answer to that is no, but go ahead, David.
Yeah, no. So if you have a local government, oh, wait, but there's a clarification here. That was supposed to say local government employees of employers who opted out. Yeah, so if you're working for a local government that has not, that is opted out and is not facilitating your payments, then yeah, you're working the same way as as you're self-employed. So that tax transcript is probably going to be the best way for you to report that income. We could look at the pay stubs in that circumstance as well, but pull the transcript from the IRS website, send that in to us, and that's going to probably be the easiest way for you to do that.
Thanks, David. Another clarifying question. If an employee is being paid whole with PTO, does the employer take the family premiums while the employee is on the leave from PTO, or only from the employer provided paid leave applied to make them whole?
Wow.
Or do they still have to pay family deductions while they're on leave? On family
Yeah.
leave?
So deductions, your premiums come out of your wages. So in most cases, if somebody is out on leave, they're not getting any wages. So there would not be any premiums due. But if the employer has a make whole program where they are continuing to pay wages as a part of PTO, then those are wages, and there could be the premiums deducted from those wages. Now, that may not apply if it is a third-party short-term disability, because that's a benefit, not a wage. But yeah, if you're using PTO, you're still being paid, you're still receiving wages. And that's true whether you're out for a serious health condition or you're out on vacation. The money that you're paid when you're out on PTO is still a wage. And so the premiums would still be deducted from it. We would still be looking, though, at the actual amount that you were paid. So if you're receiving 10% of your regular wages as part of that make whole, you'd only be paying premiums on that 10%, only on the amount that you were being paid by your employer.
Thanks, David. I do want to move over to a couple of questions that we've already answered in the Q&A, but haven't talked about yet. We have a question here from Mallory. If you were to move out of state during that 3-year period, would you still have to participate or continue participating?
Yeah, so if you move out of state, what's going to happen there is you're not going to be working in a way that's generating income that is subject to FAMLI. So what you want to do then is call our customer service team, and they're going to walk you through the process of what you need to do to make that there. I'm actually not sure at this point if you're going to inactivate your account or if you would continue to file wage reports just showing that you hadn't earned any wages. But when that happens, the customer service team will be able to help you out on what happens there. But you wouldn't be paying premiums anymore, because if you're working out of state and you live out of state and you're not connected to Colorado anymore, your earnings there aren't subject to family premiums. Also means you're not eligible for family benefits. But yeah, once you're out of state, you're no longer working, and the 3-year clock is still running there. So if you leave the state after 2 years, you're gone for 2 years and you come back, you don't have to come back and pay an extra year. You've been doing what you're supposed to do for 3 years. You had 2 years of earnings and 1 year of no covered earnings, and that meets our requirements there.
Thanks, David. We have a few more minutes left, so we can get a few more questions in. One here from Cheryl. Is there a waiting period before an employee receives family benefits, or is it paid on day one?
There's no waiting period for family benefits. I know like workers' compensation, if you're injured and you're off work, you've got 3 days before you get workers' comp benefits. We don't do that at family. There are a couple of wrinkles though. One is if you're using incremental leave, you don't get paid until you've used at least 8 hours of leave. So, if you've got somebody out there who has a health condition that requires them to attend doctor's appointments on a regular basis, and so they come in January, they file a claim for family benefits, and they're taking an hour off every other week to go to the doctor, they're not going to get benefits until they've accrued at least 8 hours. Now they're going to get benefits back to the first time they took leave. The other issue there is that we're required to pay benefits within 14 weeks, or within 14 days, I should say, of when they're requested. We're going to do faster than that. That's our goal, but you're not going to get a benefit deposit into your bank account the day you file. You'll be eligible for benefits on that day, but it's going to take us a couple of days to process the claim and get those payments out there.
Thanks, David. I do want to get to Nicole's questions here that revisits the health insurance for employees of opted out local governments. She's asking, if I lose my health insurance, if I'm working for an opted out local government, doesn't this defeat the purpose of the program if I don't have insurance while I'm on maternity leave? David, could you clarify that, Nicole, you may still have protection in other laws, but go ahead, David.
So there's some other laws that may come into play here. I'm not an expert in any of those, so I don't want to get too deep into it because I don't want to give out wrong information again. But there are some things, the Affordable Care Act, FMLA, that do address continuation of those benefits. So if you're covered under FMLA, there may be some protections for you. That's gonna give you some protection. And yeah, it's a rough position to be in if you're working for a local government that is not participating in the program, or even if you are working for a local government. This section that requires the continuation of health insurance, it's what we call Section 509. It covers retaliation and interference. So it's the job protections of FAMLI. And unfortunately, those don't extend to local governments. It's just the way that the ballot initiative was written. There's some reasons under the state constitution why it was written that way, but it is a rough position to be in. And I would just hope that our local governments, as organizations that are there to serve their citizens, to serve the people, for the benefit of the people, would make the right choice there and not retaliate against employees for taking leave they're entitled to, and not terminate their health insurance again for taking leave that they're entitled to. But at the end of the day, I don't have any authority to come in and make them do that. But when we talk about the health insurance, there may be some other laws that would protect you in that case that don't have that same carve out for those local governments.
Thanks, David. We've gotten through all of our Q&A, but I do want to revisit a topic that we've talked about previously, and that's covered in a question from our live YouTube audience. And this is for Talat, who's our subject matter experts on the premium system. Talat, the question is, if I'm self-employed, she's already registered and she's already reported her wages, but she's not allowed to pay premiums. I thought we could start paying premiums before 2024. So Talat, if you could clarify when self-employed individuals who self-elect coverage will be able to start paying those premiums based on wages and or income that they've reported, similarly to the backdated situation.
Yes, thank you, Jessica. So back when we started the program, we had allowed for self-employed to come in, register, and also pay premiums. And then during the program, there were some policy changes. So that were going to affect the self-employed and employee of opted out local governments. So at that point, we decided that we would restrict any payment of premiums and stopped new registrations of self-employed. And so to answer the question, right now, if you are registered, you will not be allowed to pay any premiums until the policy team, the rules go through. And we will open up registration as well as the premiums on January 1st, 2024, or as David mentioned, whenever the rules become effective for them.
Thank you, Talat. We have just a couple more minutes left, and this one from Jacqueline that just came in, we haven't yet talked about today. What if you are not working and retired? Can you still register for this program?
So our program provides paid leave from employment. If you don't have any employment, there's nothing to take leave from. If you really wanted just to take a look at our system, you could as a self-employed individual, but you're not going to be reporting any wages. You're not going to be eligible for any benefits. So there's not really any protections there for you. There's not any benefit to doing it. So the answer really is no. If you're retired and you're not working, you don't have any wages, you're not paying any premiums, and you don't have an employment to take leave from.
All right. Thank you, David. We've gotten through all of our questions and right on time. So thank you to everyone who participated today. Thanks for joining us. We'll be sending out the recording and the slide deck to everyone who registered. And it will also be published to our website, family.colorado.gov. We just got one more question, so we'll see if we can fit it in our last 2 minutes from Tanner. Reading the article you linked for Elena, it sounds like the answer to her question is no, there are no protections. Follow-up question, does FAMLI apply to the 3-week period in 2023 in terms of not allowing an employer to require the use of PTO while on unpaid FMLA?
All right, I'm going to be honest. I think there's some context here that I am missing in this question. It's a follow-up to a question and answer I didn't see. But yeah, so under what I was calling our 509 protections, retaliation and interference, there aren't any protections for employees of local government. You might be covered under other rules, other laws, but you're entitled to benefits if you want to participate, but you don't get those job protections. As far as not using PTO, that is a requirement in FAMLI that you cannot charge an employee PTO while they're out. You can't make them take PTO. That's going to be a wide-spanning requirement for somebody who's out on FAMLI. You can't charge them for PTO, or you can't make them use PTO before they're eligible for FAMLI. And so that's what I think we're getting at there. But I do think I'm missing some detail to provide a good answer, and hopefully somebody will be able to follow up with you on that.
Thanks, David. And with that, we're just at time. So we will close it all up for everyone. And again, expect to see the recording, slide decks, all available on our website and send out to everybody who registered. David, any final thoughts?
Well, thank you all for being here. I love talking about FAMLI. And again, feel free to engage with us and all those methods that were listed there on that slide.
Thanks, everyone.